All right. So we looked at open interest in, the earlier video. We understood the basics of it, right? Then we looked at p-void, the price, volume, open interest analysis. So now let's dive in deeper, okay, and really take a deeper look at the entire data, okay, and how we can analyze open interest, especially for Nifty and Bank Nifty, right? So we can look at this option chain analysis, okay, and we can get that from the NSE website, right? So if you go to nseindia.com, and if you go to under live market, you click on equity derivatives. Okay, so here it will give you the option chain analysis for whichever FNO instrument, right? Be it Nifty, Bank Nifty, or you can select for any stock as well. Okay, now why is this data so crucial, right? Guys, this data is used by all the big players, okay, and it is created by the big players, right? Now understand one thing, to win in the markets, okay, you have to go in the direction of the big players, right? Wherever they are making their positions, that is where we want to be as well. Okay, so this data gives us, a good understanding of where the big players are making their positions, right? What are the good support and resistance levels, and where are these big guys really entering, And so this data will sort of give us an indication that, okay, at this particular level, this is happening. So based on that, we can infer that, market will tend to go in this direction, right? So it's all just about interpreting this data. Okay, now I know it may seem really overwhelming or confusing just looking at all of this, but once you start to break it down, step by step, it's not really that complicated. Okay. So let's begin, right? And let's try to understand what this data really tells us. Okay, first thing we need to look at is on the left side you will see all the calls, right? All the call data, and on the right side you will see the put data. Okay, so this option chain analysis is just a breakup of what is happening on the call side and what is happening on the put side. Okay, and we just need to interpret that data. Right now, most of the big players, right, whenever they make a position, they usually tend to hedge their position, right? And they use options to hedge their positions, right? If they're, if they have a bullish bias on the market, right? So they'll be long, let's say Nifty futures. So then they may come to the option side and hedge. Either they will sell call options or they will buy put options. Okay, so this data really tells us as to where the big players are making their position. Okay, so on the left side you can see all the call options, and on the right side is the put options, and here you will see two different colors, right? One is this sort of this peach color here, and then white, and then even on the right side we have this white and peach data. Okay, the colored data is simply the in the money call options, okay, and the white data is out of the money call options. Okay, we're not going to go much deep into in the money, out of the money, and so on, but we majorly want to just focus on what is happening near the strike price. Okay, so let's say if Nifty is trading, Nifty is trading at what now? 11,800, 811. So we want to look at the most recent strike price, right? This middle column are all the strike prices. So 11,750, 800, 850, and so on. Okay, so now Nifty is trading at 11,811. So you will always see, the most recent strike price right in the center, right in the middle. Okay, and that is what we want to focus on, right? What is happening nearby the strike price, right? The most current rate. Okay, so this data, right, basically indicates the range for the month. Okay, what is going to happen for this expiry, right? For this month's expiry. Okay, and that is what this data really indicates. So that is what we want to interpret, right? You know, many times you might hear people say that Nifty will be in this particular range, right? In a range of, let's say, 900 to 800. So how do they get that? By looking at this data, right? So now let's really look at it. Let's look at it. Now, if you come here to the right side where it says OI, okay, we want to see where is the highest OI, right? Open interest. Where is the highest open interest? Well, if I see here, I can see that it's here, right? 12,72,000. Okay, and that is at 11,700 strike price. Okay, so what this tells us, just one second, let me take you here. Yeah. Okay, so here 12 lakh 72,000, right? Okay, that's too thick. Okay, so 12 lakh 72,000 on the put side at 11,700 strike price. Guys, what this tells us, okay, this is giving me the support for the month. Okay, this is basically telling me that traders do not want price to go below 11,700. As simple as that, right? Or that they will not allow price to close below 11,700. That's why you will see that's why you're seeing the highest OI at this strike price. Okay. So basically we can say that this is the support level, the strongest support level for the current month expiry. Okay, so that's a strong support level. Now come to the left side, right, and to the call side, and let's see where the highest OI is happening here. So if I see this is around what, 35 lakhs, okay, at 12,000. Okay, so we have the highest open interest at the 12,000 strike price. So what this is telling me is that traders will not allow price to cross 12,000. Okay, or they do not want price to cross 12,000, right? So this will become a strong resistance area for me. Okay, so now can you see that we have got our boundary, right? We can call this our boundaries, where on the lower side 11,700 is the lower boundary and 12,000 is the upper boundary. So we have our major support and resistance levels for this month expiry. Okay, what this data is telling me, that Nifty for now will be in this range, right? The data can keep changing, it keeps changing. Okay, open interest will keep changing and so on. So we need to keep monitoring this data, but for now, this is telling me that the range for this current month is between 12,000 to 11,700, right? So, you know, having said this, so first thing we need to do is identify the boundaries, right? Where the highest OI is on the put side and call side. And once we identify the strike price, that strike price will become our boundary or our strong support and resistance levels. Okay, now we need to understand one thing. This OI data that you see here, okay, all of the data that you see here is of riders. Okay, option riders. Now what are option riders? They're simply sellers. Okay, when you hear, you know, that this call has been written or there's some writing going on, that simply means that there's some selling going on, or the demand for selling has increased. Okay, so all the data here is of option sellers, of riders. Okay, so now if you see that there's 12,72,000 open interest here. Okay, now if this data is positive on the put side, now what is a put option, right? A put option, if a put option goes up in value, right? If it goes from 100 rupees to 110, okay, what does that mean? What does that indicate, right? That means that price has gone down. The price of Nifty has gone down. That's why the price of the premium of the put option has gone up, right? So when price goes down, the value of the put option goes up. Okay, so if this is a seller's data, right, and if we see positive open interest here, right, what does that indicate? Right, what does that indicate? If we have positive open interest on the put side, and this data is of riders, of sellers, right, that means this many contracts, or this much interest is there to write put options, to sell put options. So if we're selling a put option, does that mean we are bullish on the market, or are we bearish on the market? Right? That means we are bullish on the market. Okay. If you have positive open interest here on the put side, that means this many contracts or this many traders are bullish on the market, or bullish at this level at 11,700. Okay. Now, vice versa, same thing on the call side, right? If we come to the call side, and if we see here that the highest open interest buildup was at this 12,000 strike price, right, of 35 lakh contracts. Now, if this is a seller's data, that means 35 lakh contracts have been written at this 12,000 strike price. So if this is a seller's data, and if somebody is selling a call option, does that mean that they are bullish on the market or bearish? Okay, this simply means that this many contracts or this many traders are bearish on the market, right? So 35 lakh contracts have been written at 12,000 level, means this many contracts, right, are bearish at this particular level, 12,000. Okay, so this data is simply saying that these guys will not allow price to cross 12,000, or at least close above 12,000, and these guys will not allow price to close below 11,700, right? That's the very general way of understanding this. Okay, now understand one thing, the data keeps changing, so we need to keep a track on the data. Okay, for all we know, this number of contracts may come to 12,100, and then this can become our next major resistance, right? So this data will keep changing throughout the day. Okay, so we need to keep an eye on that, right? Now, we spoke about positive. Now, what if this data was negative? Now, what if we had negative open interest here? Right? What if we had negative, like if we come to this change in OI, you know, few columns you see positive and few columns you see negative, right? So as we discussed, the positive, right, on the put side means that these guys are bullish at that particular level. Now, if it's negative, right, it can mean two things, right? It can mean two things. That people are exiting their positions, right? That these guys are exiting their positions, or they're trying to create fresh they're trying to create fresh selling position. Okay, I hope this is not confusing you, right? Positive open interest here, okay, right, means that people are selling put options. Now, if you sell a put option, that means you are bullish on the market. So this negative data means that people are buying put options or they're exiting their sell position. Okay. So in this case, it may indicate that price, they may be bearish at that particular level. Okay, now if you come to the call side, again, here you can just see all positive data, right? So the positive data simply means that this many people have sold call options, means they're bearish on the market. Okay, so if we have negative open interest here, that will indicate that these guys are either exiting their sell position or they're creating fresh buying positions. Okay, so this is simply how you analyze the open interest data, the option chain analysis. Now guys, understand one thing, that this data can be analyzed very, very extensively, meaning we can go into, you know, each column here and analyze that individually, right? So the data here can be analyzed, you know, on and on and on, and in a lot of depth, right? But we're not going to get into that because it can get very confusing. Okay, and honestly, we don't need to go to that extent. We simply need to understand the basics as to what is really going on here. And then we're going to combine this with our charts, with technicals. Okay, to really give us the best trading opportunity, right? So that we can get the best trading decision. Okay, this data is really good. It should be analyzed, but we need to really combine it with technicals and charts to get a better understanding. Okay, so let's let me take you to, let's look at a 3 days data and along with charts to see how, you know, things work and how we can combine the two. Okay, so let's start from here. This is let's call it day 1, right? So first thing, what do we need to do? We need to identify our boundaries. So if we look on the put side, right, where is the highest open interest? Can we say it's right here? 24,52,000, which is at 11,800. Okay, and now come to the call side, and where is the highest buildup of open interest? Right here, 35 lakhs. Okay, at 12,000. Right, so we've got our boundaries, our resistance and support for the current month expiry. Right, so this is saying that price will not go below 11,800, and this is saying price will not go above 12,000, right? So this is my range between 800 to 12,000. Okay, now what we want to look at, this particular column, right? The one right next to open interest, which is called change in open interest, right? As we can see here, this change in open interest. So, and what we want to look at, guys, is the most recent strike price, right? So this day Nifty was trading near 11,900. Okay, so I want to look at the nearby 3-4 strike prices. Okay, the at the money, which is what we call as at the money call options. I want to look at the most recent strike prices. Okay, and what I want to do is I'm going to use a method of addition, right? I want to add the three most nearest strike prices. So, and where the highest change is happening, right? As you can see, the highest change is happening here near the current strike price. Okay, and what I want to do is I want to add them up, right? I want to add them up. So this 175, 380, which is 5.5 plus. So this is approximately 9 lakhs data, right? So 9 lakh contracts have been written, meaning sold, on the put side. Okay, so what this is telling me is that these guys here, okay, are bullish on the market, right? Around these levels, they are bullish on the market. Okay, now let's come to the call side and see where the action is taking place, which is right here. Okay, can you see that here 10 lakh contracts have been written, plus 3 lakhs, plus 3 lakhs, that's 16 lakh contracts have been written in this area, 12,000 to 12,050. Okay, so what this data is telling me is, right, sellers are sitting near this level, 12,000, 12,050, right? Heavy sellers. So these guys do not want price to go above this level, and these guys do not want price to go below 900 or 850. Okay, so it's a fairly small range, right? Let's say between 900 to 12,000, a 100-point range. So this data is not giving us much information. Okay, as of now, it's telling us that it will be a range-bound market between 900 to 12,000. Okay, and if we look at the chart, this is 3rd July, right? We were looking at 3rd July data. Okay, this is 3rd July right here. Right, as you can see, it was pretty range bound. Okay, it was pretty range bound, and this data is telling us that our range is between 11,900 and 12,000, somewhere up here, right? Around 12,000. So this is our range. Now let's go to the next day and look at 4th of July. Okay, now we need to first identify our boundary. So where is the highest open interest on the put side? Can we say right here, 30 lakhs contracts have been written at 11,900. Okay, and on the call side, can we say here 42 lakhs have been written at 12,000, right? So again, my range has become even smaller, right? Our boundaries have become even smaller. 3rd of July, it was between 11,800 and 12,000. And now 4th of July, it is between 900 and 12,000. So the range has become even smaller. So now let's see what is really happening here. Okay, so 10 lakhs plus 4 lakhs, 14 lakh contracts, right, have been written near this 900 level. Okay, so this may act as a good support for us, guys, 900. Okay, and what this data is telling us that heavy contracts have been written near 900. Okay, so these guys are bullish near this level, 11,900. And now let's come to the call side. And near the call side, we can look at okay, if we take these 3 days, that's 18 lakhs plus 3, 21, around 24 lakh contracts have been have been bought, right? Have been purchased. Okay, so here we can see the riders are exiting, and now the buyers are entering the call options. So these guys are also bullish near this 11,900. Okay, so what we can say is, guys, 11,900 may act as a strong support. Okay, and we may see some buying happening near those levels, right? So this is acting as a very, very strong support. Okay, and 12,000, as we analyzed, is a strong resistance, right? So this will be our range. Okay, now understand one thing: the ranges can also break, right? The ranges can also break, and so we need to keep an eye intraday, right? Intraday during the market, what is happening, because the data keeps changing, right? And so the ranges will also change. Range as in our boundary, right? So if one of the boundaries breaks, okay, then we have to look at the next particular level, right? And we'll look at this in the next data. So 4th of July is telling us 900 to 12,000 is the range, right? And as you can see, it was just simply range bound between 900 to 12,000. It was just in that range. Okay. Now, let's come to the third day. Okay. Now, this was at the end of the day, right? If we look at the starting of the day, I don't have the data, but let's see this anyways towards the end. So now this data is telling us that the highest open interest is here at 12 lakhs, so 11,700, and here at 12,000, where 35 lakh contracts have been written. So now this is my new range. Okay, but this is at the end of the day, right? Now at the beginning of the day, or at the end of the previous day, right, as we saw here, okay, 12,000 was our upper boundary, correct? So this data is telling me that price does not want to cross 12,000. So now let's look at the charts. Let's look at the charts, and we saw that 12,000 on the data is a strong resistance. Okay, now if we combine technicals with our data, right, and if I just draw a line like this, okay, if I just draw a line like this connecting these swing highs, right, can we say that this trend line will act as resistance on the upside, right? And can we see that a sort of a rising channel is forming, or a rising wedge, right? And now the data is telling us that near 12,000 levels we have strong resistance. Okay, we have strong resistance. So the data is telling us 12,000 is strong resistance, and now technicals, right, this trend line is telling us that this trend line will act as resistance. So see what happens the next day. Price opens here, okay, and it starts to take resistance, right, near 980 levels, almost close to 12,000. Okay, so this would have been a perfect selling opportunity, because data is telling us that price will not go above 12,000. Okay, means it is a sell on rise towards 12,000, and technicals is also telling us by this resistance level, this trend line, that we have resistance up here, right? So when you combine both of the things, guys, okay, you can get fantastic trades. So this was a clear sell at these levels, near this trend line and near 12,000. Okay, we're just 10 points away from 12,000, or 15 points. Okay, so this was a clear sell, and see what happened. Price resisted this trend line, and uh, it broke. Well, this was budget day, so quite a risky day to trade, but this was a perfect selling opportunity here, guys. Okay, and just see the fall thereafter. It broke the support of 900, right? It broke the support of 11,900. Okay, so when that happens, right, that was our boundary, right? 11,900 was our boundary. So if that boundary is getting breached, we need to go and look at the next support level. So where was the next major writing happening? Right here, 11,800 level. Okay, and now if we had looked at the intraday data on this particular day, we would have seen that 11,800, the highest OI was at 11,800. Okay, so that would have been a great support level. Okay, so now if we have sold here, right, maybe we could have covered near 11,900 because that was a strong support, right? And so now 11,900 is breaking. So then we have to go further and see what else we can infer from the charts. Okay, so if I connect this swing low to this swing low, right, I can see that this support trend line comes exactly at 11,800. Okay, can you see how I drew this? I connected this swing low to this swing low, which gave me this support trend line. So now my data is suggesting 11,800 as a strong support level, right? And my chart is also showing that yes, as per this trend line, we have good support here. Okay, so I would have looked to enter again here, guys, right? I would have looked to enter near these levels, 11,800, maybe kept a 20-point stop loss, and you get a good, 70-80 point bounce till here, right? So I hope you guys are starting to understand how we're combining option chain data with technicals. Right now, this will take some practice because I agree it is not simple at first. It took me some time as well to understand, but as you practice this, and as you understand the boundaries and where the data, what is happening at each particular level, then and if you combine it with technicals, trust me, this is it, right? This is it. If you understand this one simple thing, you will get fantastic trading opportunities. Okay, and you will be much more confident in your trades because the data is also supporting it, right? So, start practicing this, start practicing reading the option chain data. Okay, it will take some practice, but with time it will become a lot easier, right? So all of this we saw on an end of day basis, right? All of this we saw on an end of day basis. Now in the next video, we will look at how to analyze this on an intraday basis, where we look at this data every 10-15 minutes and try to identify trading opportunities based on this data for intraday. Okay, so I hope you guys learned something from this. Just go back and watch this as many times and practice this because this works beautifully, guys. Okay, so thanks for watching. I will see you guys in the next video.